All right, I want to start with Cidara Therapeutics. It's ticker CDTX. Their shares have been up more than 100%. So it's a biotech company that's developing a flu treatment. The big news is that Merck has agreed to buy it. It will pay $221, 50 cents a share in cash, a total transaction value of about $9.2 billion. The story behind it, though, Merck has been trying to make up for the upcoming patent loss, especially its cancer drug Keytruda. It's their best selling in the pharmaceutical history, accounted for almost half of their revenue last year. And this patent loss is going to be huge. I mean, they're expected to erode sales by about $18 billion over the next 5 years. So it's looking to expand the portfolio, right? In July, Merck agreed to buy respiratory drug maker Verona Pharma. I remember that for around $10 billion. So you talked about it, Paul, this trend of competitive deals in the pharmaceutical industry. It just keeps continuing. They're trying to get these new drugs.
Hedge funds just love biotech stocks because you can make huge returns if you're right. So if you think you have, quote unquote, the edge, I know something that the market doesn't, then you can really get asymmetrical payoffs. But you can also get crushed.
Yeah,
this is a good one. Right now,
this is a good one. Yep.
It definitely is. Now, when you guys go get concert tickets, do you go to Stubhub? Ever go to Stubhub?
Yes.
Yeah, for
Is
sure.
that the place you go? Okay. Well, their shares are down as much as 22%. STUB. They beat expectations for second quarter revenue, but its CEO and founder, Eric Baker, he said they're not giving guidance for the current quarter, and investors didn't like that. They said, what he said is that the company is taking a long-term approach. That's how he described it. He said the timing of when tickets go on sale, it can vary, makes it hard to predict consumer demand. The company does plan to offer the outlook for 2026 when it reports fourth quarter results, so you will get it, just not now. But this is a time that the first time it reported quarterly results since the IPO in September. So
here's
early
the
days.
unwritten understanding for an IPO. If I'm going to buy into your company, and I don't know your company, but I'm taking a risk. What you owe me is at least 1 or 2 quarters of good earnings. So not only did I sell all my shares in StubHub today if I'm IPO investor, I'm trying to borrow as much as I can and short it. That's what I'm doing. This is a
I'm looking at
look.
that. The percentage in terms of float, 56% is what I'm seeing on the terminal for short interest.
Terrible look. All right.
Gosh. And finally, I got to hit Warner Brothers, WBD, up as much as 3%. So this is in the Wall Street Journal. They're saying that Paramount, Comcast, Netflix, they're preparing bids. They say there's a apparent cutoff for those bids of November 20th. And they're saying Warner Brothers hopes to have it all wrapped up by the end of the year. You have the Bloomberg report that their CEO, David Zaslav, they're kind of re-amending his contract to make sure his stock options remain eligible to vest, and even if it's sold. So a lot of kind of pointers in that direction.
That's the one, amending my compensation agreement, that tells me that they are really, really incented to get a deal done. He thinks something's going to get done, and he wants to make sure it gets. I think it's a very good sign, and I think you've got multiple bidders there, all with deep pockets. But I tell you, Warner Brothers Discovery, it's got an enterprise value of almost $90 billion today. You may have to pay a premium, so let's say that's $100 billion. That's a big deal for everybody that we're talking about here. I mean, it's a transformative deal for everybody we're talking about here. So I think still some more private equity is going to be needed here.
Up 109%.
But it's been a dog forever. So
that's fair.
This thing should be a $40 stock.